Yeah, good morning, everybody. I'm glad to see a lot of people out right at the start of the day and at the start of this wonderful event. I think this is now fourth year, if I'm not mistaken, and it's growing every year. It's great to see the interactions here. The topic for us is basically on MSME lending, where is the business and how to win it. My name is Rahul Mallick, and I'll be moderating this panel with a very experienced group of professionals. I think the tone was set by the earlier presentation where we can see how important MSME is. Over 7.5 crore MSMEs in India, most of them, more than half of them are micro actually. And therefore, how important it is to get the lending business going and get money into their hands. And I think we'll try and shed some light on it as we go. So I'd just like to, without further ado, start this session. I'll just introduce the panelists and then, ask them a question and they can talk about, rather than I talk too much over here. So I think I'd start with Mr. Hemant Shah. Hemant is the executive director at Suryodaya Bank with a wide range of experience before that as well with Kotak and other organizations. So Hemant sir, the basic question for you is how is it that how are the SFBs now seeing the MSME story playing out given there is so much access to data and of course now there is a regulatory framework in place for you to grow that business?
Thanks, Rahul. So very important aspect, I'm saying MSME across, I'm saying as an overall for the whole Indian market point of view and specifically from bank and then in specific SFBs, that is a very, very high potential growth engine which everyone is focusing on and we need to. I'm saying as we all know, small finance bank, while had a specific purpose for, having got it licenses maybe almost 8-10 years back, but now the things have come into the play where they nearly need to grow. While doing what they were doing on a micro side of business, which was more of an individual lending, now to get the same micro side of things, which is on the micro and small enterprises, as already been knowing the numbers, that there is a pretty large number of customers. And the whole point is from the balance sheet point of view also and from growth point of view also, it's extremely important. Banks are ensuring to get into the tier 2, tier 3 categories. Of course, the large cities and setups are there, but to focus on that and see that, what all can be done to meet the requirements of those customers to make sure that they really get going. They're going consistently and keep kind of adding value to their business and the entire ecosystem and cycle. So it's extremely critical thing for anybody. And seriously, nobody can miss it now or can't afford to miss. That's the kind of a stage the entire MSME piece is now.
Great, thank you. Second, I'd like to go to Ashish. Ashish is the MD, CEO of a very innovative organization called Northern Arc. They've done a lot of very different things within the ecosystem. And we'd love to hear a little bit about what Northern Arc does, and of course the MSME business there is core to your business. So how is it that you all are facilitating it across your omni-channel model?
Hey, thanks Rahul. Morning everyone. Excited to be here. So Northern Arc essentially got work on enabling the flow of money. That's what we do. We run a comprehensive credit solution franchise, which ability to originate large pools of loan, underwrite it, process it, invest from our funds, invest from a balance sheet, make it available for global and domestic investors, make it available for retail, and if required, collect. So we bank about 50, 60 non-bank finance companies who just sharply focused on the MSME space. And we also directly lend. Our core objective is to provide, how do we ensure the access to money in this segment. It's the, if you go to the previous presentation, there are about 7.5 crores registered MSMEs in the country. about 40 trillion, that's about 14 to 15% of India's credit goes to them, but you still have about 35, 40 trillion INR who don't have access to credit. They are a meaningful contributor to GDP, meaningful 60% of employment comes to them, but how do we ensure we are able to underwrite and provide access to money to them? And that's core our endeavor, both from our funds and from our balance sheet.
Okay, great, thank you. Next, I'd like to come to one of the backbones of this entire credit system is the credit bureau, and we have with us Aditya Chaterjee, who is the managing director of Equifax. And basically, Aditya, from your perspective, how are you seeing the growth in the MSME business, and which are the sectors within that which are actually showing improvements and where the potential is as well?
Thank you. Good morning. Great to be here. So, from a bureau perspective, if I say MSME is not a homogeneous term, right? Even within the micro, what as a bureau we are following is even below the micro, what they call as the informal micro enterprise. Now this informal micro enterprise is around 40% by number. Of the 7.5 odd crores, the informal micro is about 3 crores. So they form about 40% of the number, but in terms of the loan book, they would be 2 to 3%. Unless we make the changes from the bottom of the pyramid, unless we strengthen the underwriting, have bureau data, have alternate data to the bottom of the pyramid, I believe we'll not be able to make a meaningful difference in the entire MSME perspective. So to me, the potential lies in this informal micro. By definition, this cohort is largely rural. This cohort is largely unbanked. This cohort is not, existing to any MFI or an NBFC. So we are watching this cohort very closely. And as I said, the growth of the entire engine, we feel, depends on how this 3 crore micro enterprises grow.
Yeah, like we said earlier, most of the MSMEs actually sitting in micro. And one of the enabling factors for that is, of course, how do you onboard these people and how do you get data around their activities in? And I think we have a very good perspective that we can get from Venkattesh here. He is the head of Habitus, and I think he has a very nice way of putting what does the Habitus stand for, and what Habitus does, I think, will be useful for us also to know, and also how the alternate data is now being tapped through your ecosystem to enable credit.
Good morning, all. We are into the space where non-individual can be in the financial institution segment. Let it be onboarding, GST, all this aspect put together, how it will help the lenders. That is what we are working on it. And if we see the number, 80% of the GST taxpayers are proprietorship and partnership companies. The tax collection close to 20%. In the sense, the concentration actually, any financial institution we take, they want to work on the concentration risk side. So that is the ideal place to concentrate more on the banks or NBFCs anywhere. So in this space, how we are at stage 1 where we can get into digitization, but how to take it next level, that is what we are focusing on that.
So Habitus does, Habitus, he said, is earnings before interest and tax. Is that right?
Yes.
That's what you defined it as. So what does Habitus enable? How are they enabling how would it help the ecosystem, really? What is it that you've been able to do?
So our core focus is on the onboarding aspect. Let it be a KYC. It can be any type of entity. It can be a proprietorship to public limited, private limited. There are certain changes in terms of compliance, in terms of user experience, in terms of regulatory reporting. So the all aspect put together, how do we solve? It can be a single stack that can help any financial institution manage. Every institution have their own stack actually, but how to strengthen the stack, that is what we are focusing on that.
Great. Ashish, you wanted to say?
I think I have a point to what my colleague just said. This is the large cohort of micro enterprises. And providing access to them becomes the core because eventually they will grow. Now we've seen that a lot of them that market got shrunk because of the crisis we've seen on the MFI side, correct? And now we've seen both regulatory tailwinds, but also about innovation, to my mind, comes from the blended finance. How do you use the blended finance to enable providing access, which is in a commercially viable way, to them? So we're doing a fund where large philanthropic companies investing money as a first loss cover. And then we are raising money to deploy to these smaller people. This is small dairy in the villages. Yeah. Providing access to them become more important. They are not GST. Yeah. They don't have that data. Right, so how do you create products? And I think the big tailwinds is also now with RBI saying up to 20 lakhs of unsecured loans to these enterprises can be covered under the guarantee. So I think bunch of that, if you put it together, is you will be able to address this 40 lakh micro enterprises, and providing them access to credit becomes the core to drive the growth here.
And in fact, your organization has done a lot of work in bringing the co-lending ecosystem alive, and working with a lot of banks and of course on one side and the NBFCs on the other side, putting the structures in to enable that. So that, how do you see that? Because that is something that, like you said, is going to be core as we go forward. How do you see that growing, and what are the tailwinds there, or the challenges even, that you'd like to talk about?
I think the biggest piece was how do you create in a simple terms, the most customer-centric and a product-agnostic platform for you to digitally underwrite and service the customers. And I think it took us some time, but about 5 years ago, we built our own platform. We underwrite on any given day between 20 to 25,000 loans, where we connect, engage, fulfill the entire journey of these customers. Now, it could be a small business loan, it could be a dairy loan, it could be a large ticket home equity loan, or it could be a personal loan. So irrespective of your credit need, or irrespective of the product, you're able to underwrite the customer and then provide the solution. Now, that can come in from hundreds of partners who pushes the application, and then you decide what's the best way to fulfill that credit demand, and then manage it through the cycle. That becomes the most important piece, and it's a big driver of growth for us. For us, that business has grown at about 40% CAGR, and we're deeply committed to building it both with the partnerships, with the service providers, with the end users, with the where we need to provide the convenient financing, what I call it as convenient financing solution. And that's pretty much core to us in the banking of the small micro enterprises and the MSME space.
Absolutely right. It's all about access actually at that level. We get caught up in the interest rates and things like that, but whatever interest rate you provide is less than what they pay. So, that's important. Yes, Hemant, you had a...
Yeah, just to put it across, I'm saying getting the credit access very quickly is what is the entire piece. Because this is a segment where you can't be kind of keep looking at data, records over a period of time and then, go back and look and come back. I'm saying instant clarity is what they need. I'm not saying instant confirmation. They need instant clarity, what is possible. And if it is possible, how fast? I think these two things are very prominently to be asked. And I'm saying, just to add what Ashish was saying, I think we have kind of developed the systems where the people, I'm saying our ground staff goes across to them, meet them, instantly tell them, saying that this is what is for you in terms of, and daily almost 1,000 customers are, and that also in the larger cities, leave aside the semi-metro, the tier 2, tier 3 things, and which is what our focus is going to be as we go forward. But it's very easy and they know it. They said, yes, it is possible. They not, it is possible. It's, I want it or I don't. At times you said, yes, it is possible. He said, okay, I don't want it. They also want to be kind of assessed to know, can I get it what I need it? I think that's the whole point and purpose. So getting access very fast, and in our current system, it takes just 1 day to put the money back into the customer's account. And he starts using it. That's what they want. I think they really not want to get into the large value, large ticket, paper-oriented process. It's all required to be, are you okay with me? Can you lend me? Is the two questions, you get it answered and it's done. I think that's going to be key to reach out to this mass, which is also a class.
How are you using, or are you being able to use any alternate data streams? How is your credit decisioning? How is that being enabled for you? Because, as a bank, that becomes even more critical.
Absolutely. So what we have been able to do it across maybe a lot of bureau data, which is very, very important for us to pull in, and the behavior which we have seen, and over a period of time, the geographies and the kind of segments data which we also have created, which is beyond bureaus, to see that what is possible in these segments. And I'm saying the segments are very many. It may be a small provision store, maybe a small laundry shop or a small dairy shop, whatever we call it across. So it may be the data insights, getting into it, and to get it ready with, say, if this is what you are fitting in, because it's not a customer-specific credit. It is more about market-specific and segment-specific credit, what we assess. And whosoever is there in that area, based on, of course, their credit bureau score and other parameters, been able to help us, because that's the data with which we go. We don't take data and then go back. We go with the data and say, here is it. You can get it. You define, this is the thing which is a pre-approved or a predefined. I wouldn't say pre-approved, predefined credit. That's what is helping us. And the data which is more largely bureau-based, plus the insights which we get it from the different data sets, and we put together and drive the engine, data engine, or the business rules as we call it, and get the things which is qualified. We have been able to generate a huge amount of this thing. It's not, over last 1 year, it is never be a fund that it got dried. You keep on getting the funnel, and somebody who would not ask in January would definitely ask in November. I'm saying that's also one of the key in the same funnel you run it up.
Yeah, when do you give it to them, which is the cycle during which they are being provided?
Yeah, it depends on that as well. Depends on the segment,
Correct. No, so, Aditya, to take this forward about, data sets, we had used alternate data with Equifax and created what some of you might have heard of. We called it Moose Score. And it's become a bit of a nomenclature that is now used in the dairy industry to establish credibility of the farmer. And similarly, what else, Aditya, is being done to actually use early warning signals or early data indicators, by the credit bureau to actually innovate and help, enhance credit in the MSME space?
Sure. So if I take examples of, bureau data to reflect on this space, and I stick to my theme of the informal micro, we looked at the cohort of business loans, business loans till 2.5 lakhs, 0 to 2.5 lakhs. Now you would all know that the asset class which grew the most in the last 2 years is gold, right? But the asset class which grew as much as gold, which was upwards of 80% in the last 2 years, is the business loan ticket size 0 to 2.5 lakhs unsecured. The secured also grew, though this segment, 90% of the loans are secured. The secured also grew by over 60%, but the highest growth was in the low ticket, which is 0 to 2.5 lakhs BL unsecured. And that grew at a pace of over 85% CAGR over the last 2 years. We believe that a part of it, frankly, may be reporting. They are just reporting it separately. But a part of it is an actual growth happening in the loan disbursement to the bottom of the pyramid. Now we have to dig deeper into this. And if I get into, say, the ticket sizes within this cohort of 0 to 2.5 lakhs, the ticket size, which was an average of, say, 80,000 2 years back, has risen up to 2 lakhs right now. which is the good news, that more and more loans are getting disbursed and the ticket sizes are also high. However, the volume of this segment, 0 to 2.5 lakhs, is still very less, and that volume has to grow. The other point is also this is still very urban-centric. If we do a pin code mapping of this, it is still very urban-centric. The rural uptake is still to happen. We all know it could be an overhang of what the MFI went through for the last 2 years, and maybe this year the rural offtake will happen, but till now, rural has been a laggard. And again, as a bureau, we think it is because of the MFI effect, which is becoming better as we go along. So this year, we should see a good rural growth in the lower segment. To me, that is key.
So which actually is within the urban also, so you're saying rural is a laggard overall, but are there any segments within the MSME space where you are seeing growth coming? Is there any analytics that you could help us with there to say that these are the good segments which is growing, and also where there is an opportunity, where you see more improving credit trends and things like that, improving credit performance?
So frankly, one handicap of the bureau is that the reason or the sector is not a part of the incoming submission to a bureau. So when we have to assess, say, micro industries like, say, fishing or textiles or dairy, it becomes very difficult because the fill rate of what we get of the sub-segment is very poor. That's a work on us to take it up with RBI, and we are doing that stuff. But doing micro-segmenting is tough from a pure bureau data. We have to tie up with alternate data sources, and that has its own issues. But what we can do is geo and the pin code level. So from that itself, the rural comes out as a laggard, but a bureau is not a great indicator of a micro segment because the fill rate is extremely poor.
So rural was good until the MFI crisis happened in the last 2 years? Was that something that was growing at a faster pace? That was our understanding at least.
Yes, that is what we think. As we know, the MFI took a dip of about 40% in the portfolio. The dip has plateaued since September onwards, and now the delinquencies are going down.
Yeah.
So it's all good.
Yeah.
This year should be great. So we'll have to wait and watch a bit more to refresh the data maybe in April, May. But my feel is that the growth will come back because MFI is coming back.
Yeah, Venkattesh, sorry, Venkat.
So, the same topic on the data side, of course, Tier 1, Tier 2, Tier 3 city, it is not the same, and it's a thin bureau file, whatever. We are seeing certain successful model where 80% depend on the risk model, 20% on the ground reality. Certain financial institution tracking on the power consumption of the MSME, fleet, the occupancy, the running kilometers, all those things. So in this case, if we can add value from the lender's perspective, the assessment angle actually, it can address the cap, at least for the time being, actually. That will help the borrowers to get in the loan on time.
Absolutely. One of the data sources that we had done with Equifax earlier was milk, basically for dairy farmers. And how much milk are they producing every day? What is their production over a period of 6 months, 1 year? And therefore using that as averages to actually say that, that is what could come. But Ashish, you wanted to say something? You were saying?
No, I think there are two parts to it. If you reflect very deeply on the MFI issue, which is a function of over leveraging, and you cut the data, obviously that sector has shrunk by about 35-40% from 3,60,000 crores to 2,70,000 crores. That means there is cohort of population which has which has been washed out because of over leveraging. But if you actually dig deep and, you will, in what we're seeing in our own pools of data, because we don't get as much as you get, but in this segment, we get almost 5-6% of NBFC data because of securitization and other stuff we do. What we're seeing that when an MFI customer graduates in what I call as an MFI plus to what he was referring to, loans up to 2.5 lakhs and so on and so forth, that portfolio, even during the crisis of last 5 quarters or 4 quarters, has actually performed better. So when you're individually able to underwrite that customer, that performance turns out to be better. So what we've done, we run our own scorecards, which a lot of other lender uses called NeoScore. The objective is how do we bring the credit policy into play using the data science of both lagging data which comes from the bureau and then our own leading data to the stuff some of my fellow panelists spoke about, and helping companies to say whom to lend, how much to lend, what price to lend, and if you take those 3 decisions, what will be the probability of default. So I think if you're able to use that, end of the day, the graduation of that MFI customers to the next phase has to happen. And the successful companies will be one who are able to identify and give them the more money, which is essentially towards the productive use. And that's where I think the performance will come in. With CGFMU, with the government support coming in, I think that will be a big boost. That will provide the much needed tailwinds to scale and to address the needs of these micro and nano enterprises. Yeah.
That's what we've been all waiting for, I think, that at SFB level.
No, that's the point. I think you are completely in sync with what Ashish puts it up across. So the entire microfinance piece which was there, in the years which has gone by, had a model which is a JLG model, and then that was the model which was a key, I'm saying, till up to COVID. I think COVID has made a significant difference in that model per se, that the joint liability piece has now actually been slowing down and significantly slowing down. And that is where it has moved to individual lending. And that's where the ticket size also, I'm saying if you see the entire cycle, the same customer whom you are lending individually will continue to grow and fits into the micro. It's not going to be the new customer who's going to take place from that point of view. It's the same segment. The moment you kind of, you assess them little more specifically, individually, with the kind of a credit analytics and both bureau, non-bureau information, and see that, and then what we typically internally call is as a Vikas loan. And that's exactly the thing which has really helped. In a data cohort point of view also, it is typically still standing out better than the kind of a joint liability group in data which has been there overall. I think SFBs in general have now tried to move or rather slow it down the JLG piece and more the individual credits, which is unsecured credits, maybe ticket size, maybe up to 2 lakh, maybe up to 2.5 lakh, and in MSME we have gone up to 5 lakhs as well. So I think that's the whole piece which will pick up from here, and that micro will remain micro, but it is going to be more business oriented, I would say commercial engagement, activity oriented lending, and that is where the entire informal micro enterprises stands. They are the people who are informal micro enterprise. So we see them as a cycle and want to build every product which can help them every stage to grow from their individual needs to a commercial needs to a maybe larger needs in life, which is smaller homes, etc. So you be with the customer with the cycle, and then you need to have your products which we can help you to grow with the customer and the bank.
I think the one point which is worth mentioning, as a responsible lender, you need to find that differentiation. And the elephant in the room, we must recognize the concept of JLG, I think, had ceased to exist almost a decade back.
Absolutely.
To me, it is an OPEX arbitrage, how efficiently I'm able to attract bunch of people who come together and I'm able to service them together while individually underwriting it. To my mind, that's the thesis it is, and then providing solution depending on what it is. So hoping that the JLG will do, and that there is CAG, FMU, I will not be doing my role as a responsible lender because I don't think you can rely purely on that. So your science analytics in ensuring that you're able to identify and service those customers becomes the most important. The issue is, if you look at 100%, and I think that's for you, and my data may be wrong, so you please correct me, is that if you look at, there is a large concentration of unsecured business loans, we call that, whether we call it MFI++ or just a UBL. There is a large concentration of personal loan in this cohort, and there is a large concentration of small ticket laps. And we're seeing, as the MFI market has shrunk, there is a stress in these 3 cohort of segments that has to get washed off till you are able to underwrite more efficiently and ensure you get better outcomes here.
No, that's true.
Yeah, no, so one of the things I just wanted to ask about is also, these, the digital frameworks that have now come available, the account aggregator framework, the digitization of cash flow through GST, and, is that really something that has got activated now in the last, because, when it started, it's been some time that they've been around. So is there a way that we can utilize that now better? How are you all seeing it working out? I mean, anybody here who's using it?
Yeah, I think both the account aggregator and the GST piece is working it out. Okay, it's not that it has been a very significant contributors, but at the same time there is definite sense in the data which we look at from both the point of view, and that helps in the little larger segment or a higher segment. Not that informal micro, it helps in a real, the customers who have taken the URCs and stuff like that. So that is where it is helping. And it is helping in terms of assessing them well, because that's the data which helps you to say that at least this is, if I can say, declared and documented. That's what it comes up across, and helps you to build your products, your line, and your risk appetite. Build on saying that how far or how long you can go along with that piece. So it has, while it's not that entirely and solely things are working only on that, but is it being used? Yes, it is. But definitely as the time goes and things move, and this segment when it start growing and putting more into this, their banks and the GST data will continue to help to look that as a kind of a pipeline, or look that as a channel to see that yes, your credit assessments can be done on that. Of course, they are helpful, but not to the extent as the industry would have looked at till now in this segment.
See, the challenge has always been about, we take an assessment based on past data, and then now we've given a loan for say 2 years or 3 years or something like that. And how is that income tracking through that, and early warning signals? So the idea that account aggregator would provide some of those early warning signals and make those, make therefore your credit risk management a little better. Is that something that is now evolving? Has that come of age, you think? The two lenders here, Ashish, you have a view on that? Because I think there must be a lot of data that's coming now to you, because you are doing this work across, 2-3 different, points.
So we have 50 million time series of loan performance data. We use quarterly refresh, and I think this is a very powerful piece for you to align your policies, and more importantly, how to manage the risk you have. And also in our case, we bank about 350 other NBFC, and to tell them what we are seeing. And we have a unique capability, unique stuff, the way we work, not only from the Bureau refresh, but also we do online, on-ground monitoring. So we cover about 300 districts where our risk team goes and figure out how loans have been underwritten, originated, serviced, and sunset. This means texture of what's happening at a specific geography, coupled with data, gets you to read even before you get to see any impact in a financial. And I think those combination of that is pretty powerful, and we're using a lot of machine learning and AI tools to make our data analytics much sharper on that.
See, just to add one, I think being connected is going to be the key in this segment. I'm saying you can't just have a lent it and just, kind of wait for the due dates to happen. And you have to be connected with those customers very, very regularly and
but
see
digitally,
how things are.
It's important to stay digitally.
Absolutely. Digitally as well as, see, the whole point is the entire QR piece is one way to look at it across. I'm saying because these are general, small shops and establishments, and with the QR as another feature to it across, and the moment you can see that how the QR is getting used and how the receipts are coming to the accounts is a very clear digital way to look at it across. And then second thing is meeting customers very regularly and just connect to see that yes, when I lend what it was, and when the cycle is on, the customer is in the same way, he is growing, he is managing, he's stable, it's important. These are the early warning things which has to look at, and that's going to be, while it is an added cost to the entire piece, but that's a very, very, basic, essential and required stuff in the data-led as well as non-data-led. So here is the phygital comes into the picture. You do definite digital stuff it across, but you can't get away from the physical stuff. So what I put it across is the physical connect is very important, and see that what really a customer has it and how really we can take ahead with that. Yeah.
Venkatesh, you want to say?
Last 3 months, UPI data is giving more clarity than last 2 years ITR.
Sorry, again?
Last 3 months, UPI data is giving more clarity than last 2 years IT returns. That is what I'm saying. That. But the cash multiplier, we don't have an answer as of now. Maybe Aditya can work around that actually, how we can find out cash multiplier.
Making decision based on more recent data rather than too dated data. Is that something that is the credit bureaus are working on? I think you were mentioning something like that as well.
Yeah, so the good news is that effective June, the data will come weekly. So that will make it much more fresher. And I'm sure the way RBI is going, effective 1 year from now, they will go to a daily kind of scenario. And I think us and all the other bureaus are ready for that. One last point I wanted to make, because the graduation concept came up. If you see the GLP of MFI, even though the sector is improving, the GLP is dropping. It dropped in January as well. The current is about 3.2 lakh crore. The peak was 4.3, 4.4. So it is about 100 lakh crore down from the peak. And we feel that the GLP will keep going a bit down. Why? Because as the panelists told here, there is a huge movement from JLG to individual loans. A small finance bank would have about a 50% plus overlap between an MFI and a retail. Any other NBFC MFI would have a 35-40% overlap. So 35-40 or whatever 50% overlap base is a huge analytical number. So are you underwriting based on the new retail footprint of theirs or the past MFI history, whatever, good or bad? And as they say, if after 3-4 cycles, the woman hasn't graduated to retail, then you have made no benefit to his or her livelihood. Right? The retail graduation should happen after the 3rd or 4th cycle of the loan. So graduation is also one thing we are very closely looking at, the overlaps, how this base is behaving in retail. You said they are behaving well. We have a mixed signal, but let's see. Depends on the company and the portfolio. We have seen great, we have seen bad. We have seen the graduation being used to say no rather than to say yes for some banks. But it's a bit mixed now, but as we go ahead, it's going to play a very critical role for sure.
Yeah, no, you're absolutely right. I think, the panel is basically been saying that the micro is important, onboarding and cleaning up that base is going to be critical. You can see that the risk it seems to be abating in the MFI sector. But as people scale from JLG to individual loans, that is actually going to be a very critical thing to watch for with most lenders as this activity progresses, because that is when we are getting true micro and we can see the growth of the MSME business coming. I think with that we can end the panel from our side. We just have a minute or so. If there are any questions for any of the panelists, we'd love to take those. It's open to the audience. No? Okay. So I think that's where we are.
So Rahul, just one line to end it across. The entire piece is from microfinance to micro banking. I think that's the shift which the industry has to see or the segment has to see. I'm saying it was just a microfinance and the micro banking. While it is a very thin line, but that is what we believe is going to create a big difference in time to come.
Yeah, and people like yourselves who are who are actually forming the backbone of the ecosystem, to actually provide this growth, and make that happen. Thank you. Thank you, gentlemen. Thank you very much.
Check, check. I would request Mr. Rahul Mallick, Director at Flamingo Infinite, who moderated the session so well. Can we give the moderator and the panelists a huge round of applause? Thank you. I would request Rahul sir to please give token of appreciation to all our panelists. First up, we have Aditya B Chaterjee, Managing Director, Equifax. Then we have Ashish Mehrotra, MD and CEO, Northern Arc Capital. Then we have Venkattesh, founder and CEO, Ibitos. Can we give the panelists a huge round of applause, ladies and gentlemen? Then we have Hemant Shah, Executive Director, Suryodaya. And to extend a token of gratitude to Mr. Rahul Mallick, I would request Shashank sir to please come up on the stage. Mr. Shashank Shekhar, who's the co-founder and head of consulting at the Digital Fifth, to lend token of appreciation to Mr. Rahul Mallick. Gentlemen, can we please have a group photograph?